Hello and welcome back. You tune in to Buy and Sell Now, and it is time when we start taking all your stock-specific queries and get them answered by experts. The number is going to flash on the screen right now for you. Please do write into us on the WhatsApp numbers that is flashing on your screen right now, and send in your question with the buying price, the holding period, and your question, and we'll get them answered by our experts. So without further ado, let's get on board Jigar S. Patel, who's a Senior Manager, Technical Research Analyst and Anand Rathi Shares and Stocks Brokers. And we also have Gaurang Shah, who's the Senior Vice President, Geojit Investments, who's now joining us. Hi, Gaurang. Hello, Jigar. Thank you so much for taking the time out and joining us. Okay, so let's actually, before we get started with the show, let me come to you, Jigar, on the way market is shaping up at this juncture. We have managed a recovery, from the day's low. Now, we were all expecting a gap down opening, but we have managed to recover at least on the index level, just a 100-odd point recovery on Nifty, and Nifty Bank is also recovered 400 points from the day's low. But what are the levels you're really watching out for? And on the downside, especially, what are the levels to track? Because it is a truncated week. We have a market off tomorrow. By the end of this week, what are the levels to track?
Very good morning, all of you. Overall, in terms of Nifty, currently there is a massive gap down of approximately 500 points, but later on we managed to recover. But overall, if we look at a bigger picture, right from April 2025, the low was somewhere near 21,800, and we made a high of around 26,350 odd levels. So currently we are hanging on 38.2% retracements, which is close to monthly pivot support of somewhere near 26,500 odd zone. So currently the major support would be the budget low, which is close to today's low, which is somewhere near 24,571. So this 24,000 approximately 24,500 would be a very major support. If we are going below that, in worst case scenario, there is a possibility that we might go and test somewhere near 24,100, 200 levels, which is the breakout zone of April 2025. So as of now, the stance would be very cautious. And I would advise to, wait and watch for at least 2-3 days to cool off between this war going on between US and Israel, Iran, all three together. So overall, the structure is still looking very gloomy. So as of now, we need to wait and watch for, continuously we are getting closing about 24,600 or 24,700 odd soon. So for next 3-4 days or current week, the resistance would be a very good resistance is somewhere near 25,150, and on downside support is expected around 24,600, 500 levels.
All right, so that's the take on Equitas. But the next question that I have, Gaurang, is coming in from V. Mathur. He has queries on 3 questions. First one is Jio Financials. He's holding 1,600 shares at a price of 322. What to do in this one? The other stock is Tata Consumers, holding 300 shares at a price of 1,207 rupees. And lastly, having TCS, 96 in quantity from a price of 3,871 rupees. He's a long-term investor, but as you can see, having a loss in all the 3 counters. What should he do?
Well, thank you so much for having me on the show, Srishti. Good morning to all the viewers of ET Now and to your entire team, and wishing all of you all a very happy Holi with colors of joy in your life.
Thank you. Same to you.
From my company, Geojit, and myself. We have coverage on all 3 of them, Srishti, as a disclosure from a long-term point of view. And again, a small disclosure that all recommendations that I'll be sharing with you this morning on the show, they are part of our fundamental research team recommendations. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we give recommendations to our clients on similar lines. They might have their investment interest. Now, here we have covered, like I mentioned, Jio, Tata Consumer, and TCS. We have coverage on all 3 names from a long-term point of view. In case if you got in at higher levels, Srishti, I believe that these are the kind of markets that gives you opportunity to allocate a little bit of more capital towards equity investment. And if you got investment in strong companies, fundamentally strong companies, case in point, all these 3 names, then I think you should possibly think of averaging it from a long-term point of view, because these are the price levels which we may or may not see going into the future. Yes, there is uncertainty as far as geopolitical situation is concerned, but we have seen such incidences in the past and the markets have recovered. So keeping that in mind, I think first of all, hold on to all these three names, then you can average also in case if you got in at higher level.
All right. Average in on the good names is what Gaurang is saying. But let's move on and get another question. This is coming from Parth from Punjab. He says he has Equitas Small Finance Bank, 1,000 shares. He's bought at a buying price of 70 rupees. He wants to know what he's not given the time horizon. Actually, he wants to know what should he do. Let me come to you, Jigar. Equitas Small Finance Bank at 70 rupees. That was his buying price. At this juncture, obviously, it's at 70 rupees was the buying price, so he's clearly sitting at a loss right now. What should he do? Suppose his holding period is, say, for the next 1 year, 6 months to 1 year. How should he be looking at this counter?
See, currently in Equitas Small Finance Bank, again, we saw a recovery during the morning, but overall, the major resistance is seen near 65. But overall, the indicators are hinting towards some, sideways to consolidation zone. So I would advise him to, try to buy on dips or in a staggered manner around 60 to 65 zone and keep a target of around 75 to 80 for next 2 to 3 months.
All right, so that's the take coming in on Equitas. But Gaurang, the next question is coming from Gangadhar. He's from Bangalore. He is having shares of RAC, has bought 40,000 shares at a price of 373 rupees. Is that a sell or a hold at this point in time? And especially in light to the merger announcement with PFC, how do you see the stock moving going ahead?
Sorry, did I hear it right? 40,000 shares, Srishti? Did I hear that right?
Yes.
I mean, I don't know, honestly, Srishti, I don't know whether this gentleman wanted to take up short-term trading call, and because of the loss, he has decided to turn a long-term investor. I think in stock markets, you should be very, very clear, because that's a very thin line, being a trader and being an investor. And if this is an investment, I believe I'm taking it for, I'm hypothetically guessing it, Srishti, was after the announcement made by the Honorable Finance Minister in the budget on the floor of the House about merger of REC and PFC, if I recollect right. And then we saw these two stocks rally, and then post that markets also corrected and these two stocks are down and out. Now, we don't have any specific coverage on REC, but let me give a little bit of insight as to what the government is planning to do as far as new power generating capacity is concerned, merger, and of course, then consolidation in the power sector, especially with power generation, transmission and distribution, power finance companies, and power equipment companies. Now, all these things are likely to perform well. The only problem is, case over here is whether this gentleman bought in from a trading perspective. Because it was a loss, he has turned a huge speculative trade into investment. It's a strong company, I can say this, REC and PFC. We don't have coverage, so I won't go into specifics. But just for the benefit of your viewers, I'll again repeat myself. There is a very thin line between being a trader and being an investor. You need to have clarity as to what you are and which way do you belong. Don't turn into an investor because your trades have gone wrong. I think that's the most a difficult situation that you can land into, and not a very wise decision.
All right. So that's Gaurang's advice, to be careful, especially in this market, and don't turn from a trader to an investor just because you got the call wrong. But let's move on to the next question. This is Sudha who's writing in. She says she wants to know, she wants to buy 2 to 3 stocks at what price should she enter? Keynes Technology, Anantraj, Coforge and Infosys, and she wants to hold it for the next 2 years. So Jigar, she wants the entry levels for Keynes Technologies, Anantraj and Coforge.
See, first of all, in Keynes, currently the structure is, again, definitely there is a small bounce back after the massive sell-off, but overall, buying on the dips is advised, but overall, the support is expected near 3,600. So I would advise to enter near 3,600 zone. Currently, the price action is showing somewhere near 3,750. So 3,600 would be ideal zone to enter in Keynes. Whereas Anantraj, again, see in Anantraj also similar kind of structure is seen after a massive sell-off. We saw bounce and again there is a pullback. But overall, the major trend line right from 2024, 2020 through the support is expected near 500 zone, and currently we are sustaining above that. So in Anantraj, from 490 till 515 is ideal zone to enter in Anantraj. Whereas in Coforge, Coforge again, similar kind of pullback is seen, but the fall is very, kind of a vertical fall. But overall, the support and previous breakout zone are somewhere near 1,000, 120, 1,150 odd zone. So I would, advise to buy in a staggered manner around 1170 till 1150. And overall, one can keep a stop loss on closing basis below 1,000 in Coforge.
All right, so let's watch out for both of these counters. But Gaurang, the next query that I have is coming in from Vara Prasad from Hyderabad, once again a long-term investor. And he has a query on two counters. I'm not sure whether you track HG Infra. If at all you do, he is having 53% loss in this one, having 190 shares of this particular counter. And along with that, he also has Team Lease, and there he's having 61% loss. That he's telling us. What will be your advice? Sell, hold, or maybe add more?
This is a difficult one because we used to have coverage on HG Infra some time back, and after our targets were in place, we have removed the coverage. So currently, we don't have coverage on HG Infra, nor do we have coverage on Team Lease. So I won't go into specific Shrishti in terms of buy, sell, and hold. But I would always mention this, that review your investments at the appropriate time when your risk alarm gets triggered off when it comes to the downside. Don't hold on to your investments when you see them going down 30, 40, 50% or more. Because then recovery of the capital itself becomes a big problem. Forget about making profit on your investment. So take appropriate steps. Don't let your capital erode to a great extent.
All right. With that, it's time for a quick breather. Don't go anywhere. After the break, we'll come back and get all your questions answered. So stay tuned and keep sending in.
Welcome back to Buy Now Sell Now show, where we get you answers for all your stock-related queries. And we do have Jigar as well as Gaurang with us to guide you better. And let me take the next query. And Jigar, this query is coming in from RK Ahuja. He wants your advice on stocks like Lemon Tree as well as Syngene, where he's looking and actually he's already having these stocks in his portfolio and having 25% loss is what he's saying. If you can guide him, what exactly can he do right now? Lemon Tree as well as Syngene right now.
See, currently in Lemon Wine Tree, again, there is a continuous sell-off on weekly as well as daily chart, but the overall yearly support has been taken out. The level is somewhere near 4,452, and currently we are trading below this. And even in current week, we have taken resistance exactly on that particular level. So I would advise him to, wait for at least this current week. If
Jigar, sorry to interrupt you in between. The stock is Lemon Tree Hotels, the one close to 113 rupees.
See, Lemon Hotels, so overall the current structure is looking, overall the selling has been seen right from the top, but overall currently what I'm feeling is based on indicators that he should hold this particular counter because the kind of structure we have been witnessing in Lemon Tree Hotel is lower low structure, but currently we are seeing some bullish structures on intraday basis. So even on MACD, there has been some bullish divergence seen. So he can keep a stop loss below 108 on daily closing basis, but overall one can expect a bounce till 125 till 130 within next 1 to 2 months. and the stop loss will be kept below the daily low of somewhere near 108 on daily closing basis.
All right, so that's the view coming in on Lemon Tree, but let's move on and get the next question. This one's coming from, okay, there's no name here. We will not be able to take this question without a name, but let's move on and go to the next question. It's from Miriala, who's writing in. Miriala says that he has 120 shares of Torrent Power at a buying price of 1,485 rupees for the last 1 year. He wants to know if he can book his profit. He's a medium-term investor. What would be your advice, Jigar, on Torrent Power that he's bought at 1,485? So he's clearly made his profit. Should he book his profit or should he hold on?
See, currently, Torrent Power, again, there has been a continuously rally seen since last 3 to 4 weeks. So I would advise him to hold with a trail stop loss of 1,500. If it is going below on weekly basis, and getting closing below 1,500, then he should try to book some partial profit. But overall, the structure is very bullish, and I'm expecting at least 1,650 within the next 2 to 3 weeks.
All right, so that's the take coming in on Torrent Power. Let's watch out for this particular stock. But the next query that I have, Gaurang, is coming in from Ajay Ghosh from Kolkata. He's having the stock of BSC bought at a price of 2,661 rupees, having 127 in quantity. What's your take here?
So, Srishti, first disclosure, we are positive on the sector, that is the Indian capital markets. And if you are of the opinion, which we are of, that in the next 3 to 5 years, you would possibly get in anywhere in the range of 12 to 15% CAGR. And if you compound that to 3 to 5 years, then all Indian capital related market stocks which are strong on the fundamentals will survive. Point number one. Point number two, there is an added tailwind in terms of the NSE IPO now. In principle, approval has been given. We were given to understand that second half of this calendar year is when we could possibly see the IPO of National Stock Exchange hitting the street, which will keep a tailwind positive for related stocks. BSC happens to be a very strong performer in this particular sector, that is Indian capital markets, and it is a platform provider. Over the last 5 years, we have seen consistently uptick in terms of new investors coming into the market. We've also seen a slight bit of positivity in terms of number of footfalls in the SIP mode related investments, which comes into equity market eventually. So not going to specific in terms of buy, sell and hold, but like, for example, BSC is a platform provider. We like a company called CAMS, Computer Age Management Services, which is a service provider like NSDL, CDSL. So these are some strong players. We have coverage on CAMS and we are positive on the sector. And BSC is also a very strong player.
All right. But with that, it's time for a quick break. Don't go anywhere. We'll be right back to answer more questions on the other side. Stay tuned.
Back to Buy Now, Sell Now, and let's keep it going with all your stock-related queries then. And Jigar, I'm coming to you for the next query, and this one is coming in from John. He's writing to us from Chennai, and he's a long-term investor and looking to buy Pine Labs. What's your take out here? Is this the right time to enter at current levels when it comes to Pine Labs?
See, in terms of Pine Lab, again, the structure is very bearish because continuously it is making lower low structure, and currently it is following the regression trend channel, and currently it is placed near the lower end. But overall, based on this momentum indicators, there is a very crucial level of 175, and currently the price action is somewhere near 181. So I would advise him to wait for at least 3 to 4 days, and we need a closing above 183, 184 mark. If we are getting closing above this level 183, 184, then there is a chance that we might go and test the higher level of the regression trend channel, which is close to 200, 205 levels. So at that time, we can buy above 184 and keep a stop loss of below 175 and with a target of somewhere near 205.
All right, so that's the word coming in as far as Pine Lab is concerned. But let's move on to the next question that is coming in from Nikhil Sharma, who's writing from Mumbai. He says he's an intraday trader and a long-term investor. He holds 20 shares of Emami at a buying price of 504. His predicted target price is 541. When is the right time to exit the stock? Jigar, he is predicting a price of 541. The stock has come down to 458. What would be your advice to him?
See, currently based on weekly structure, I don't see any immediate upside, but yes, definitely we may see a short-term bounce because of vertical fall. And currently the stock is placed somewhere near a previous demand zone of somewhere near 450. But overall, I'm expecting at least 540, 550 within next 1 or 2 months. So I would advise him to, exit partially at that particular level, because even on weekly basis, the 200 period average is somewhere near 550 along with the pivot resistance. So that would be a very difficult for Emami to break that level. So advice would be try to, exit near 550, 560 zone.
All right, that's the take coming in on Emami. Let's watch out for that. But the next query that I have, Gaurang, is coming in on Trent, wherein Krishna from Bangalore is writing to us, holding the stock of Trent and currently having a loss of almost 14%. What's your take here, Gaurang? What should he do?
This has been a challenging time for Trent, Shrishti, and there was verbatim, which I believe was of good corporate governance in terms of earnings constraint and a slight bit of downward visibility for some time in the quarters. But given the fact that after the third quarter, we've heard the management who are willing to open new stores not only in big cities and metros and tier 1, tier 2 cities, but also in tier 3 and tier 4 cities. This, they said, will be opening up new opportunities, new geographies, and new footfalls will come into the store for both Trent as well as Zudio, which has been a power brand for Trent. We have a positive coverage. Hold on to your investments. And like I was mentioning, these are the times when markets give you an opportunity, you should possibly take it. And if you have investable amount, and if you're looking at investing or adding a little bit more in Trent, I would definitely advise that. But hold and add would be the advice on Trent.
All right, on that note, Gaurang and Jigar, thank you so much for taking the time out, joining us and answering all the stock-specific questions. That was the last question. And happy Holi to both of you. Well, GICRE has amended its hull war risk scheme, declaring key global sea routes as high-risk zones. The war-related marine cover will cease from March 3rd.